Guys, three big companies today reported. Company number one, Ulta. This is a company I own shares of. Never, and I mean never, buy a company because anybody in this world, I don't care if it's Warren Buffett or me or anybody in between, if they own a company, do your own research, figure out if the company makes sense to you. Ulta reported and they missed big. Let's pull it up right here. Expected to bring in $2.61 billion in revenue. They brought in $2.55. Expected to make $5.47, brought in $5.30. It was recently announced that Berkshire Hathaway became a shareholder. The stock skyrocketed from low 320s to 375. I actually lost a few shares from a covered call, but now after hours, it is down 7% to 341. All-time high, March 14th, 2024 at $575 per share, 52-week high, all-time high. Now, a lot of people would sit there and say, this is a retailer. This is going away soon. Yeah, maybe so. But there are things I like about this company, one of which is they're buying back a lot of shares. They're selling for 19 times free cash flow, which is going to be a little bit lower now. They have a really high return on invested capital here. So they do a great job managing the money invested in the business. They're very, very, very smart about their capital allocation. That's why I love that Berkshire Hathaway bought them. I'm hoping they bought them for that reason, to realize that their capital allocation is really strong. Now, you see a company miss like this and you get a little worried. Go, what the heck happened here? Let's go look at the financials quarterly. So again, they reported $2.61 billion in revenue. The same quarter last year was $2.53 billion. So a little bit higher than last year, but they missed their estimates. Okay, not huge, not big, $20 million more, $2.55 billion. Earnings per share were $5.30 per share last year. Same quarter, they did $6.05. So lower profit than last year, but higher revenue. Guys, this is what we talk about. We talk about companies, we talk about earnings releases. I always say some companies miss, some companies make it. This is the way it goes. One of the important parts of Ulta is see how do their same store sales do. I personally believe consumers are a little bit weaker than everybody wants to give credit for. So my guess is Ulta and one of the other companies we're going to announce here, Lululemon, which I'll tell you about. I think they're the ones, I think they're going to be hurt a little bit more than people expect. Now, guys, I don't know if you follow me on the Twitter machine, but I put this on Twitter the other day. And guys, if you don't follow me on Twitter, grow up. Follow me at EMPaulG. I'm very active. I've done almost 5,000 posts in only two years and change. And if you're a member of our community, message me with your username and your email address, and I will follow you as long as you're a member of our community. So guys, I put in there, what are your thoughts on these two companies? And I got a wide range of ideas, comments, some people saying, hey, Ulta's kind of dead, it's retail, Lulu's kind of dead, it's retail, etc., which I was expecting to hear because retail is a concern. But I love that Ulta's going to Target, catering to women, and nothing's going to go straight up. I do think the consumer is weakening. I do think we're at or around a recession of some sort, whether we've already had it or we're going into it, blah, blah, blah. I'm not here to speculate on that, but I just look at Ulta and say, okay, I think this is a company with potential. And if you look at our main channel, I've done analysis on Ulta before. So if you want to check that out, please do. Stock number 2, Dell. So let's see how Dell did. They crushed it. Expecting $24.1 billion in revenue, reported 25, expecting $1.71 in EPS versus $1.89. Guys, I want to remind you the story about Dell Computer. They went private many, many years ago. And the reason they went private was this. They were selling for about 9 times earning and the stock was just lagging. So Michael Dell went to a private equity group and had a brilliant idea. Let's go private. Let's buy back these cheap shares. Let's go private, refocus on growth, and then when we're ready, we can have a fresh restart. Because a lot of times, companies get stagnant from a public perception persona. And since then, Michael Dell's worth like 60 or 70 billion now. And this was a stock of the darling of the 90s. They revolutionized the whole computer business. But now they're doing a lot of other things. It's a funny story. I was in college, and Michael Dell came and spoke. He's about my age, what I am now, but back then, some idiot MBA student raised his hand and said, no, Mr. Dell, I know you're trying to get into servers. And Dell interrupted him and said, we're number 1 in servers. And it was just, Brilliant. I loved it because this cocky MBA was like, oh, I'm sure you're getting into servers. But anyhow, they did a smart thing, took the company private, bought back cheap shares. There's actually a lawsuit involved. I think Carl Icahn might have been an investor and said, no, this value is way too low. Let's push for higher value. They then said to all of their divisions, guys, we want $1 of cash flow. Your job is to spend every dollar of profit on growth. That's how I feel about this company that we're at upstairs. I tell everybody now, guys, as long as we don't need the money to survive, reinvest every dollar for growth. Good growth. Michael Dell has done it. Dell Computer has done it. $24.1 billion. They rocked it. Let's see how they're doing after hours right now. DELL up 2.2% to $113. It's an $80 billion market cap. A lot of debt here. About double in debt, but some good free cash flow. 5-year average of 6.1 billion, 1 year 5.3 compared to net income. So much higher net income than free cash flow. Sorry, much higher free cash flow than net income, selling for about 15 times free cash flow with a really solid return on invested capital. And this very useless and silly dividend. Why even pay it? Maybe I'm being a jerk, but low margins, that's okay. They do a great job with their margins, pay down some debt. So they've crushed it. They're doing a great job. More power to them. Not much growth as a company, but hey, they killed it. Guys, do me a favor. Every week on this channel, we do 4 or 5 videos. We talk about earnings. We talk about news. We're going to start doing maybe some little podcasts here or there with Mo and I. The point is, if you like this kind of content, do me a favor, subscribe to the channel. Make sure you give your notifications. That way you can see when videos come out, because we truly love making these videos. Now, stock number Thrizzle. I'm not going to show you guys what they did yet. Let's go to the website. They're up 1.85%. So let's assume they beat on both. Lululemon, actually, they missed on revenue. $2.4 billion versus expected of $241, but they crushed on EPS. $3.15 versus $2.94. So $2.4 billion in revenue. Let's compare that to last year's same quarter, 2.21. So yeah, increase nicely of revenue, almost 10%. It looks like per share profit. Let's go to here, 269. They did 315. Nice growth there, guys. Lululemon, top quality brand. Very well known, very good margins, 58% because they own everything. Great balance sheet, $32.7 billion market cap, $33 billion enterprise value. That difference is essentially their debt. Great free cash flow growth, double in the last 12 months versus their 5-year average, and great return on invested capital. This is a company that's been beaten up, guys. All-time high, 516 back in December. It's currently at 265 after hours. That is almost half the price. Today, when it finished at 259, it was pretty much half the price. 52-week low, just 2 weeks ago at 226. That's what I'm saying. These are great companies. This is a great company, great balance sheet, great rep. Women love it, and the stock fell over 50% from its high. This is your opportunity. Don't get sad when stocks keep going up. You be patient. Joel Greenblatt, in his book, The Little Book That Beats the Market, always talks about that. He's like, pick any stock. Go look at their 1-year chart, high and low. It's going to be wide ranging. It tells you 2 things. 1, be patient. It'll happen eventually. And 2, anything can happen. Don't fall in love with the stock going up or down. They go up and down for random reasons. So guys, on this channel, on our main channel, we're trying to teach a process. We're trying to teach you how to think about things in investing and in the world. And if you like that, subscribe to the channel. I assure you, you will love it. Thank you for your time.